I'm Matt Bouchard here in New York City for REIT Week 2019, NAREIT's Investor Forum. Joining me today is Arlen Nordhagen, Chairman and CEO of National Storage Affiliates. Arlen, thanks so much for joining us.
Thank you. Good to be here.
Now, in your company's 4 years as a public REIT, you've acquired nearly $4 billion worth of assets. Do you expect that rate of growth to continue?
Well, obviously we can't quadruple our size every 4 years, but we do believe we'll be able to continue to grow at a significant pace. We're in a very fragmented industry, as you know. More than 80% of our industry is owned by private individuals. And so we do have a goal that we want to grow by at least 10% per year. Right now our asset base is at about $5 billion, so we do feel confident we'll be able to continue to grow by $500 million a year or more as we go into the next several years.
Now, looking across your national footprint, how would you describe the company's ability to increase rental rates, and are there particular strong or weak points in the portfolio?
Really, the issue on rental rates comes down to the localized sub-market supply-demand dynamics. And so that varies a lot by market. When we go look at some markets that are significantly oversupplied right now, such as Portland, Denver, Austin, in those markets we've had to drop rates by 3 to 10% to meet the competitive demand in order to maintain our occupancy. On the other hand, when we look at stronger markets like Vegas or several of the California markets, we've been able to raise our street rates by anywhere between 5 and 15% over last year. But the real key there is that street rates to our new customers is really a very small impact on our business. Most of our revenue growth comes from raising our rates to our existing customers after they've been with us a while. Everyone pretty much expects a rate increase at least annually, and in some markets, if we're at a low rate in the beginning, we can raise rates as soon as 5 or 6 months after they move in. So that's really the driver for our overall rate growth in terms of total revenues. And then when you look at it in terms of the individual markets, even the weaker markets, because we get so much revenue growth from these existing customers, we've been able to even move those as positive NOI, same-store NOI growth, even markets like Portland, where we've been able to maintain at least slightly positive NOI growth compared to obviously really strong markets where we'll get very high same-store NOI growth.
Now, what trends are you seeing in terms of advertising, particularly when it comes to digital advertising, as that ties into your operational success?
Well, digital marketing is really a key component of the way that we attract customers. In fact, if you look at it, a little over 80% of our customers have come to us through some form of digital marketing. That could be search engine optimization, just looking on our website. Even the walk-ins will typically look on our website to find information. And then, of course, your pay-per-click advertising, where we're paying for referrals that come through and reservations. And so it's very important that we have significant marketing presence on the digital avenues. And we've been particularly successful at that. It's one of the reasons why when we acquire properties from the mom and pops who really don't have the ability to have this economies of scale that we have, we've been able to significantly improve those operations and overall bottom line. And the fact that we're a new company, relatively new compared to our peers, has allowed us to use those scale economies to keep our marketing and advertising costs as a percentage of revenues pretty flat. Even though we do see that the pay-per-click advertising costs are going up, the economies of scale have allowed us to keep that at a pretty same percentage level.
Now, you recently announced plans to step down as the company's CEO. Can you talk a little bit about the company's succession plan?
Yes, this has been a very important part of the board's activities really for the past several years as we've groomed a really strong team of management at NSA. Tamara Fisher, our CFO and president, will be taking over my role in January 1st of 2020. I will move on to executive chairman and continue my involvement, really more involved in a strategic level, continuing to look at the direction of the company and guide that, looking at major acquisitions and major additions of new pros, for example. But all of the day-to-day operations will be handled by Tammy and her team. And Brandon Tagashi, our Chief Accounting Officer, will at that time move up to the Chief Financial Officer role. And so it'll be a pretty seamless transition, I think, but it's really well-deserved for Tammy, and the whole team is really well-positioned and gives me the chance to step back a little bit, not be quite as involved day-to-day, and focus on the strategic vision.
Great. Arlen, thank you so much for joining us.
Thank you, Matt.
For more information on REIT Week 2019, be sure to visit NAREIT's website, REIT.com.